Can you hear me now? Excellent. Can you see a gold chart in front of you? Oh, thank you guys. That is just, Sunday morning tested everything and I still get it wrong. Anyway, welcome. Greetings from beautiful Johannesburg. Supposed to be in autumn, getting into winter, but global warming, it's raining, it's cold. You just don't know what's going on, but we are going to have fun. Gotta get the timer going because you guys know me. I'm going to get carried away. Here we go. Anyway, so I wanna just talk to you about something that I think you'll find fascinating. Um, we'll do some walkthrough through do some price action stuff, of course, but I just want to show you something interesting. I'm gonna look at two markets, one after the other. Well, we'll kind of just toggle between them. Right now, we've got gold, and okay, so there's gold. I want to show you something that's quite fascinating. Everyone is highly excited about what's taking place with gold at the moment, and that's good. Buy gold, buy gold, buy gold. Just keeps going up. But there is something that I think is pretty informative and insightful about how markets work. Things can go up, but they're not going to go up forever. Things can go down, but they shouldn't go down forever. Let's talk about commodities. Okay, companies, you can say companies go down, they shouldn't go down forever. They can go bust and boom, the whole thing is gone. Okay, but commodities, we're talking about gold here specifically. It can go down, it's not going to go down forever. The other market I'm going to look at is NASDAQ 100. Okay, you could use any of the US indexes for this kind of example, perfectly fine. You could use US 100, you could use the Dow Jones, but I'm going to use NASDAQ 100. This is gold. Now, gold is just bulleting up, right? If you have a look at the chart of gold, let's go back just into this period here. This is 2006, around there, it's just starting around there, nothing specific. And if you had to look at it, if you were in the market, this is the monthly chart. So we're looking at the highest time frame that we've got on our broker, JDR. If you had been in the market, you'd have been pretty excited here way back 2000. Oh my goodness, gold is going up. I mean, it's pretty flat down here, which was the 500 level, kind of 300, that kind of level. And gold started going up. And at that point, I'm sure people said, well, is gold ever going to get to, let's say, 1,000? Like, oh my goodness, 1,000, why? And then they do all these analysis and fundamentals and everything, to justify that it can go to, 1,000 or not go to 1,000. I mean, 1,000 was way up here, somewhere there. Okay. And you down here, it seemed almost impossible. And then, if you're buying and thinking it's going to go to 1,000, then you got that kind of problem, that then you went sideways for almost a year. It's like, well, gold is going to collapse. So that's it, whatever we got to 600, 700, that was the price of gold. But then we broke out again and gold started going up. And then the euphoria kicked in again. Gold's going to go up. Gold's going to go to 1,000. And gold did get to 1,000. And let's move this video thing out of the way. Gold got to 1,000 March 2008. I mean, that is just a beautiful rally. And it was like, well, that's it. Gold staying there. The next thing's going to go to 2,000 bucks. And guess what happened? On a sustained period, the market just collapsed once again. Okay, from this high that we reached in March, we dropped all the way down in October, 7 months later, back into that range. Whether you were happy or you were sad, whether you're holding gold stocks or you're just a trader, who cares? But the fact is, when things happen that are so dramatically, at some point, there is going to be a correction. Let's use the word correction. Correction takes into account all sorts of things. People that have been buying speculating. At some point, they're going to say, I wonder, I think I'm going to get out of it. They can look at fundamentals and decide to get out of gold, or they can look at price action and say, well, we had that high, we had that low, and we kind of within the range of the measured move. So we hit our peak, we got that. I'm getting out, I'm taking my profits, I'm done. If we get another reversal going up, I'm gonna buy. Okay. Or some guys just buying gold. Could be countries buying gold. Say, well, we don't care actually. We don't, we're buying the commodity and we're putting it in our safe, and we're happy that over a long time, who knows how long time is, gold is good to stay in, right? So we don't, because we're buying the commodities. We don't have a stop in the market. We've bought it, we've put it away in our reserve bank, and it's going to stay there safe. I'm saying it's going to stay there safe. I mean, there's some interesting things happening in all this period. I won't mention country names or regions, or whatever, but gold has disappeared from reserve banks. So it can disappear, right? But the point is, gold came back, deep correction, and that myself caused panic in the market. I mean, look at that big bear candle. Okay, right. This was in the month of October. From its high, month of October, we came all the way down, and we erased, almost a year's kind of work in 1 month. Bear that in mind. Anything can happen. It did not mean, if we look at what took place, that the rally, if you like, in gold was done, or the value of gold had dropped. From a price action perspective, which is how I trade, there's nothing surprising about this. We had a range here. We go to the measured move. At the measured move, for whatever reason, profit taking, all the stuff I was talking about. The market came back and it tested. That's all it did. It tested the breakout point, as dramatic as it comes. This can happen on any time frame. This is a monthly chart. You can see this on the 5 minute, on the 15, on the hourly. Breakout points come to get tested. It can happen. May keep going, but it can get tested. That's what you got to bear in mind. Make your money, tighten your stop, get out, sell, do whatever, but it got tested. Now, if you had bought gold and you were a trader speculating on the pricing, once you saw that high test and that lower high double top, you got to be getting out of it, unless you're keeping your stop down here, which, would be quite interesting. Why would you keep your stop down here? You speculate to make money on the currency, what's the currency, right? On the market going up, right? So once you see a reversal, you got to tighten your stop, get stopped out, take your money. If it bought in here, depending where you put your stop, on this low high or here, again, same thing, tighten your stop, or you're going to get stopped out and lose money. Unless you can add your stop here and say, okay, I'm going to buy here, I'm going to keep my stop here, I don't care what happens. As a price action trader, why would you do that? You buy in here, you put in your stop here because you're saying, if I'm wrong, there's a dramatic sell-off, I'm going to get stopped out here. But if I see a reversal, then you get out, save some money, wait for reversal, or you get in and you sell. Okay. I'm going to get rid of these beautiful babies here, the indicators, just so that we don't start getting sidetracked about the implication of it. So my point is, beautiful rally, completely erased, reversed. Bulls made money if they managed to go in early on the breakout. Bears made money if they got in on the reversal. Fantastic. Then we have a high low double bottom, and you make whatever decision you want. And at this point, you kind of saying, well, I don't know if we're going to get above 1,000. We got to the high 1,032. Will gold ever get to 1,000? And you're going to get price action traders like Joe saying, well, with the low high double top, with another double top, we might just come down. If the bears are strong, they're going to accelerate down from here. They're going to take this low and they're going to get a measured move down. That's where they want to go. They want to bring price back to 364. Price action trading, absolute beauty. On the other hand, if the bulls are strong enough and they break out above the trading range like we get here, we expect to get a measured move. Bulls expect to get a measured move. And again, the whole debate starts. My goodness, we're at 1,000 level. Will gold ever go to 2,000? Where was 2,000? Way up there. Will gold ever get there? Or this is it? And blah, blah, blah. But look at this sustained rally. 2008, for 3 solid years, market kept on going up. You would have had to manage it differently, etc., along here, but the bull run continued. Then we got up here, and guys thought, okay, this is it. We just couldn't get to 2,000, but gold has hit its peak. Now, my point is, this is what I'm trying to get to, how we manage our trades. Once you get a structure that you trade, do not close your eyes and think that we're just going to keep on going up into the highest heavens. There's going to be turbulence, correction, profit taken, who cares, whatever the reason is. So you're going to have to manage your trades, right? We have to manage it. Whatever time frame, we have to manage our trades. Okay. Bears can make money. There, this is a monthly chart, so nothing else was triggered. But we got here, we went sideways. Huge 2-bar reversal here. I mean, that would have caused a lot of discussion as to what's happening with gold. But as price action traders, fantastic. We got above the measured move. Bulls were strong enough to keep going. So the market can keep on going higher than you think it will. It kept on going. And you just buy and trail your stop up, trail your stop, trail your stop, trail your stop. Don't close your eyes. Eventually, we go sideways. And guess what happened? From this beautiful high here, they would have said gold is collapsed and whatever, but price went down. Look how far we went down. We came back, breakout point, testing the breakout point, like we had here. Breakouts get tested, breakouts get tested. At some point, it got tested. The bears in the middle of this beautiful bull rally, everyone gold is going up forever. Bears who could see this made money shorted. Lower high double top, got out here, break even. Another one, they've been rewarded very well. Market is still higher than it ever was. If you look from down here, went up, came down. But correction, profit taking, opportunity for bears to sell, and bulls, unless you just stop down here, you bank your profits. Unless you got the gold in your reserve bank or in your safe, you're like, oh my goodness, look at all our retirement and our wealth, etc. has gone down. But we're going to hold on to gold because it's in our safe. We believe it's a good store of value. You just do that and hold on to it, right? Then went into a trade range and price came down exactly to the test level. Isn't that amazing? After all this euphoria and gold getting to 1,000, I mean, just haven't been down at 500 a few years back, we still had to come down all the way. Okay, whatever the reasons, valid, who cares, but price action, look at it. Tested that level, and guess what happened? Where are we? Another rally. And this time, gold got to his famous 1,000. Remember where we were? We'll get to 1,000. And here, 2,000, 1,900. Gold eventually tested 2,000. Again, a sustained rally after breaking out, a sustained rally. Gold's going to keep going up. Everyone's just buying. No one's thinking of selling. Just buy, 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 buy. Remember, this is a monthly. Of course, within daily, you'll have within the daily or the weekly, beautiful bear trends, whatever. I'm talking about just the price action. You can see it on any time frame. Sustained, beautiful rally. Is gold going to get to 3,000 when you're 2,000? When you're there, oh my goodness, now broken out above, and we're just going to keep going. But by now, we know there will be correction at some point. There came the correction. At 2,000, we had the correction. Big correction. Okay. Bears made money. When I say bears, it could be a bull who's now banked. You're not going to be holding on unless you kept your stop here. You can do that if you want. When I see that, I get out, bank the money, wait to see if I can sell, wait to see I can buy. Okay, so you'd have made money as a bear while everyone is saying, my goodness, we're not selling gold. Beautiful. 4, 5, 6 months of bearish price action, sellers making money in the market. The sellers making in the market could be bulls who had bought, right? Now taking back some of their profits, or governments doing whatever they're doing. And then we had this. Now, having seen this, what do you think is going to happen? Get out your pens, make a note, take a breakout point as crystal clear as it is. At some point, there's going to be a correction, profit taking, whatever that takes place. Who knows when this level can get tested? There is a high probability that it's going to get tested by some form of a reversal, trading range, etc. Okay. When is it going to happen? We don't know. Just like we're saying here, if you're in the market, you manage your trades, pull up your stops, do whatever, because who knows what can take place. Don't look at this and listen to the news and say it's going to go on until 5,000, which it can, but there has to be some kind of correction, profit taking, etc. When it's going to happen, we do not know, but it will happen. I'm going to show you another market, US markets. Okay, I'm going to use US 100 because that is the market that I am trading. And because I've kind of rambled on about the whole thesis, if I do this to save us time, you will kind of get a sense. Now, if you were down here, 2012, 12 years ago, and then the bull run started, anyone, what's he saying? Anyone and his donkey, is it? Anyone and his dog or something. Anyone could just buy and make money. If you see a chart like this monthly, just buy, put your stop and hold. Okay. It's like, oh my goodness, it's going to keep going on forever. Now, if you do this, I don't want, let's use that. From here to here. The price is just gone up dramatically. But the journey has been fraught with a lot of challenges for bulls. The only bull who says, I've made money ever since the beginning is a guy who bought any share that is still living in the US 100. If you bought the index, of course, fantastic, right? And just can hold it. But some of the shares went bust along the way. But let's assume the company that you bought, George Electronics, and you bought that, and the company is still going, and you just put the share certificate in your safe, you'd be smiling and say, man, I made a fortune. Such a clever guy, so wise. I held on through the bull run. Very hard to do, very impossible to do, unless you're gonna have this is like what, a 10-year strategy, 15-year strategy. But as a trader, if you're in month on month, as long as you've seen the bull candles, if you're in hourly, quarterly, what's a quarterly chart? Hourly, 4 hourly, 15-minute, and you see the book candles, you're just going to keep holding your stop right until you see a higher low, then you trade your stop. Trading range behavior, you broke out another sustained rally. Then look at this correction here. Look at that beautiful correction. Happy, 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 happy. And all of a sudden, if you've just been buying there and said, well, I'm not going to do anything to my stop, because it's going to keep going like it did before here, that would have been a problem. That should have been an alert that whatever keeps going up, there will be a correction. We went all the way up, and the correction kind of just took away all of a full year or more's work, right? Same thing here. If you started buying without trailing your stop and correcting it, in just 2 months, it's just erased all of a year's tenure, COVID, and all of that stuff. Okay, forget about COVID. We finished COVID. The rally has started, guys. Let's just buy and buy and buy. We're going to keep going until the highest heavens. And well, it was no COVID here. And look at that correction. Okay, came all the way back. Right. In just that period of a year, reversed everything that took place completely. So had you not tightened your stop, thinking it's going to go up forever, or managed it, you'd have lost all the profits that you made. But if you tightened your stop, you would have sold all the way down, made some profit, start again, find reasons to buy. And then we got to here. And as a price action trader, you're going to say, well, okay, I trade many other things, but one thing that I've picked up from George is if you get a trading range, if the bears are strong, we get a double top, we start to accelerate down and we sell off, and bears would have the opportunity to come all the way down. Inverse of it, if the bulls are strong and break out above the trading range, they're gonna get to a measured move. That's the goal, right? That's where they wanna go. So when the bulls break out above here, I'm using this. They could have used that lower one. You always use the more conservative one. There's that one. We got to it. If we keep going above this breakout, look at where we can make more profits. Okay, timer, I got you. Okay, so you saw that, and the market is getting up to there, and you have bought in here. You've got to be managing your trades. You might have been stopped out here, maybe get up again, manage your trades. But if you just think, oh my goodness, just like gold, and I keep going forever. If you're on the 5 minute, I see that often you take trades and think, oh man, I can go have a coffee. This is when I come back. It's bonus time. You just get one of those surprise candles. I mean, the market has been so full of them in the past few weeks. It's beautiful, and I really love it. If you don't manage it, you get stopped out, but you got to manage your daily drawdown, right? You got to manage absolutely everything because you get these surprise candles even on the 5 minute. It's like you turn around, get your cup of coffee, like what has just happened out of nowhere. There's no news announcements. It's just going boom, and it comes back and it carries on. That's just how the market works. There's no one hunting anything. That's just the reality of the market. We've got to know that levels get tested. Look at this perfect test of a breakout point. So if you just closed your eyes, you'd have lost money. So my point is, even if you see anything going down, manage your trades all the way down, with your stop, because it can reverse suddenly and you're like, oh man, what happened? Even if it's going up and the whole world is saying it's going to keep going up forever, it will not keep going up forever without a correction, profit taking, whatever the reason in the global economy drives it. So bear that in mind. I've used gold. I've used US 100. You can use any US stock if you want, US 500. Just have a look at what happens. Let me see if there are any questions. If they're not, I will be done. Oh, wow, guys, was it that easy for me to put this across? I think it was. All right, if there's no questions, I'm going to hand over to Sam. Thank you guys for turning up. Sincerely appreciate it. I hope you can make use of this in your trade.